We're going to be talking about global investment opportunities. So these are things that I believe that everyone should know, honestly. If I could get this message to everyone in the world, I would. I would rather. But here we are sharing, I'm sharing it with you, and who knows who to get to and impact their lives. So global investment opportunities are something that we all should pay attention to, right? We all should think about how we can grow our money, how we can invest and use it to make more money. I recently shared a video on my YouTube, a very valuable resource on why you should invest. Some people still don't see investing as a necessity. Some people still don't see investing as a necessity. Investing is a necessity. You need to invest to protect your money against inflation. You need to invest to do better for yourself and for your coming generation. Honestly, you're doing yourself a great disservice if you don't invest your money. So if you're not investing, you need to start. And you need to start from where you are. You need to start with what you have. Most people tend to wait for, oh, when I make my first million, I will start investing. I'm not saying that would never happen, but genuinely, a lot of millionaires, a lot of people that I know that have done well with their money, they started just with the barest minimum, right? With what they could afford at the time. So they didn't necessarily wait until they had all the money, right? And for a lot of people, their wealth would come in trickles. Like, it's a wealth building. It's a continuous thing you keep doing brick by brick. You keep laying the brick. And then few years down the line, you see that it all makes sense. You see that your investment can afford to fund your lifestyle. Your investment can help you do the amazing things you want to do for your loved ones. It can help you live life on your own terms. So that's all we are about here. If you've not watched that video, maybe after this class, you can watch it as well. It's just the only video on my channel at this moment. You can see why it is important for you to invest and how you can approach your investments. I sent it as a preparatory video for this class. If you've not watched it, I strongly encourage you to do so. So this is why I have decided to share my knowledge with you about global investment opportunities so that you too can start from where you are and with what you have. All right, I want you to clear all the limitations in your mind. Investment has helped me build passive income. It has helped me to achieve some of the most significant things in my life that I probably thought about 10 years ago was not possible. But investing has really helped me. So pardon me with the lights. The light is going to come back up very soon. So investing has really helped me personally, and I believe that it can change the financial story of anyone that is intentional about building wealth, right? All right, so let's get into it. So creating passive income in simple 5 steps as an investor. So I tried as much as possible to break this knowledge. I literally have like many certifications of what I'm about to share with you and years of experience. But what I try to do with this masterclass is to make it practical and relatable for you and not focus so much on the academic part of it and focus much more on the things you can genuinely start doing and take your and start seeing the result of it immediately. All right. So that's what this class is about. Okay. So we want to look at the why you should invest. I already touched on that when we started this conversation. Why should you invest? We've talked about the fact that it protects the value of your money. It can help you build exponential wealth. It can help you achieve so much more faster than you ever thought possible. I'm a living testimony of that, right? I'm a living testament of that. It can help you achieve financial freedom. Saving would never grow your money. Saving would only is the loser's game. When you're just a saver, you are losing value by default because inflation would kick in, currency devaluation would kick in. Those factors are there and they're outside of your control. So you have to focus on what you can control. And that is why it is important for you to invest. If you look at your money that you put in the bank, your money is never sitting idle in the bank. So if you're saving in the bank, your money is not idle in the bank. The banks are putting your money to work. So it is up to you they put your money to work and give you interest rates that are nothing, that are not interesting at all, interest rates that are not interesting at all. That's what they give a lot of their customers just because, you know, you decided to save. And even for the banks, they know that holding cash without putting it to work is a liability for them. So they know that, and you have to know that. Just saving is definitely not enough. So I want you to type in the chat box right now, saving is a loser's game. I want you to chat in the comment section now. Saving is a loser's game. I want everybody that sees this video to know that saving is a loser's game. Let's put that in the chat box right now. Okay, it's a loser's game and you can never win. All right, if they ask you who said so, refer them to me. I said so, and many other financial experts over the years have said so. All right, so how we're going to look at how you can start to invest in this masterclass. After going through what we're about to go through today, you will have the practical knowledge that will help you start your journey immediately. Wherever you're joining from Europe, from America, from Nigeria, from anywhere in Africa, we're going to keep it as relatable and practical as possible, all right? So you're also going to see how you can make money from it. How is it going to help you make money, all right? And also you're going to see the what. What are we going to be investing into in the global scale of things when it comes to global investment opportunities? What are we going to be investing into? So we have stocks, we have ETFs, and we have REITs. These are the three things we're going to focus on. These three assets are available on the global stock market, and that is what we are going to focus on. All right. So let me know in the chat box if you are with me so far. All right. Let me know. Let me see your chat. Let me see your comments. We are with you. We are with you. We are with you. Let me see. All right. So I know I'm not talking to myself, right? So let me see that. Okay. So why should you invest? I spent a lot of time going over these slides already, but let's just go over it again. Why should you invest in the stock market? The stock market is one of the largest wealth generating machines in the world. Pick any billionaire, pick any millionaire, any successful person, like successful financially now, because success has different variations, right? Successful financially, they would have some stake in the stock market. I've not met one person that doesn't have a stake in the stock market, right? That is successful financially, because it's one of the largest wealth generating machines in the world. Real estate and stock investing, billionaires, millionaires don't joke with it, right? So if you're somebody that you want to build wealth and achieve similar results, you should never joke with it as well, all right? I particularly love investing so much in the stock market because of this second reason. It's about ownership, right? Stock investing is about ownership. You own a piece of something great. You own a piece of something phenomenal, maybe changing the world, transforming a sector, whatever it is. Even if it is just $20 you put into a stock, you own a piece of that. So I love the ownership mindset and the ownership mentality that comes with investing in stocks. And it is why from the get-go, from the beginning of my journey, I have been solely sold on investing in the stock market, and I have not regretted it till now. 10 years after, I've still not regretted it, all right? Another reason why you should invest in the stock market is it is affordable, right? Unlike investing in the real estate market, where it is capital intensive, you need to put a lot of money forward in most cases. Investing in the stock market is so affordable. You can start your journey today with just $10. You can start your journey today with whatever you have, right? So there is no limit of, oh, I don't have money to start. I need to put together thousands of dollars. I need to put together millions. I need to gather money. No. You can start with whatever you have, right? And start investing today. All right. Another reason why you should invest is, I already buttressed this in the beginning. It protects the value of your money against inflation. Historically, the stock market has done an average of 10%, just an average, right? There are years that you have done so much more than that. That's just the whole stock market, an average of 10%, right? So imagine your money just compounding based on 10% for the next how many years, maybe to your retirement or to you're ready to take out your money from the stock market. That's just an average. There are years that it does more than that. So there is so much benefit that comes from investing in the stock market. All right. There are so many benefits that you can gain from. So we're going to, like I said earlier, we're going to be looking at three categories or three types of assets on the stock market. The first one we are going to be diving into is stocks itself. We're also going to be looking at ETFs, and we're going to be looking at REITs. So if you are following me on my Instagram, you know I've shared a lot about REITs, about how you can get started. I even posted a free webinar a few months ago on how you can start investing into REITs actively, and why I love REITs so much. But I decided to put a bit of that into this masterclass as well, so you can get the knowledge. But if you want to learn specifically so much more about REITs, I would advise that you reach out to me on my social media, Money Talks with Ife, to get the webinar. I'll just put the webinar link in the chat box. I think that is so much better. All right. So let's look at it. We're starting with stocks. I'm going to be explaining it to you in a way that a 5-year-old would understand. All right. So that we would be on the same page. I just want you to follow me and stay with me. Okay. So stock or share is a unit of ownership. That's why, I remember I said earlier that it's about ownership. That's one of the reasons why I like stocks. It's about ownership, right? So think of it as a slice of pizza. Say a whole company that is worth, a whole company now. Imagine it is divided up into millions of pieces, right? And you, every time you buy a share of that company, you take a piece of that company. You take a tiny piece of that company. So you have a whole pizza. You have a whole pizza, and it's divided into tiny pieces. And every time, tiny equally measured pieces. So it's for each share you take, for each share you buy, you're taking a piece, you're buying a piece of that company, right? That's why I said it is about ownership. And buying shares makes you joint owner of the company with many other or millions of investors across the world, around the globe, investing in the same company. You become joint owners with that. You become joint owners of that company. So stock investing is about ownership, guys. Whatever you've heard about investing in the past, stock investing in the past, this is one thing, mindset I want you to have. The ownership mindset. You cannot want to build sustainable wealth. You cannot want to build lasting wealth and not have that ownership mindset. So you have to have that ownership mindset. And that's one thing I love about stocks. So everyone, in my own opinion, I know I have a bias for stock investing, right? But I think everyone should be a stock investor, should have a stake in the stock market, because these companies you're buying, they are the ones providing services to people globally. They are the ones that are making so much money off of millions and billions of people by providing services, all right? So let's look at an example of a stock now. Let's look at Apple. How many of us use iPhone here? Or you use MacBook, you use an iPad, you use an Apple Watch? Let me see in the chat box. If you use any product of Apple, let me see in the chat box. All right? Let me see in the chat box. Are you using any products of Apple? Are you using an iPhone? Or do you know someone that uses an iPhone or uses a MacBook? Are you using any of the Apple products? Let me see. Okay, so Apple, as it is producing all those gadgets, I like to tell my people in my community that it doesn't make sense for you to be a consumer of a product like what Apple produces, or maybe it's whatever other gadget you use or whatever service you use, and you're not an investor. So you should move from just being a consumer to an investor. That's what I always say. But let's get back to this. So let's look at number of shares outstanding. Remember when I explained to you that a company, when a company is on the stock markets, like we have Apple now, their shares, like in millions that we have this one now, or billions, their shares are divided into tiny pieces. So see Apple, the mega company, divided up into tiny pieces of ownership as 15 billion pieces, right? That's the number of shares outstanding. That's basically what that means. It's divided up into 15 billion pieces, and you as an investor, you get to buy a piece of that for $216. You get to get a piece for $216. So per piece, that's what it costs. All right. So do we get it? How the whole stock structuring works? Do we get? Let me know if you get it. Remember, Apple company now, see it as a big pizza, right? And it's now divided into 15 billion plus pieces where investors like you can buy each piece for $216. All right. No matter how tiny you think your piece of one is or two is, you still need, your piece is still part of what makes Apple Apple. Do we get it? Do we get it? Do we get it? Do we get it? It's part of what makes Apple and its valuation complete, right? So this is something that you have to understand, and this is just the basic, the most fundamental concept of investing in stocks. All right. So let's look at what we call market cap. Market cap is like the entire value, the market value of a company. Remember, I said Apple now has a company is divided into 15 billion pieces, and each one of its share or each piece is going for $216 right now at the time of making this video. It's $216 right now. Now, if you want to get the entire value of that pie or that pizza that we are using as an illustration, which is Apple, the company now, all you have to do is multiply the number of pieces, which is number of shares outstanding, by the share price, the cost of each piece, which is $216. All right. So if you do that, you will see what the whole company of Apple is worth right now on the stock market. If you do that, you will see that Apple as a company is worth over over $3 trillion. It's worth over $3 trillion. That's a bit of a tongue twister for me right there. It's worth over $3 trillion, right? And that is, it's mind-blowing. This is more than the GDP of like 5 or 10 countries combined, just one company. And with stock investing, you get to own a piece of that, all right? So this is the valuation of it. Now, I want to bring to your attention that the market value, what we call market cap now, just see it as the value of that whole pizza that we are talking about, it changes over time because the share price, remember, if the price of each piece changes, it would affect the 3 trillion that we are seeing right now, 3.2 trillion that we are seeing right now. So it can change over time, or if the number of the pieces, it reduces or increases, it can also change, all right? So if, for example, now the owners of Apple say, okay, we want to buy back some of our shares from these pieces that we've given out to the public to buy, we want to take some off the market, and they would buy it back by giving money to investors that already hold it and collect the share back. All right, so that's what we call share buyback, but we're going to get into that sometime along this video. Let me not get ahead of myself. But do we understand the concept of market cap now? Let me know in the chat box if you do. Let me see your yes. Let me see. It needs further explaining. Let me know if we understand it. Okay, I see. We get it. Fantastic. So let's move to the next phase. This is the brick or fundamentals of investing in stocks. After this masterclass, I don't ever want to hear you say that you don't understand how stock investing works anymore. You have to, with the way we are building it brick by brick, there's no way you don't understand. So be calm, just follow me step by step, and you get the exact concept you need to understand to begin your journey. All right. So I want to answer the question, what do companies have to gain by offering their shares or by issuing their stocks to on the stock market? All right. And this is the point I would like to explain to you, that stocks and shares are the same thing. They are just used interchangeably. If you don't know that, please, this is the point where I want you to note that. Stocks and shares, they are the same thing. Some people will say shares, some people will say stocks is the same. They represent the same thing. There's no difference. They are talking about exactly the same thing. All right. So now that we have that out of the way, why do companies say, okay, we want to offer the public the opportunity to be joint owners of our company? Imagine you start a business selling lemonade now, and you've grown that business to a point where you've made a lot of money, but you want to expand. You want to do research on different flavors. You want to import new machineries, and you need more money to grow your company, to scale your company. Then you go and say, okay, we will give a portion of our company will be listed on the stock market. And the ownership that is available will be listed on the stock market. And the public and institutional investors can bring in their money, become joint owner of our company, and we are able to raise capital to test or buy new flavors of lemonade so that we can grow our business. That's just it. So companies issue their stocks because they want to raise capital for business. For their business, they want to expand, they want to grow. They've grown to a certain point where they have tested their business, they know it is working, they know the idea, people love the idea of their business, they have a strong customer base, and now they are saying, okay, we want to grow so much more. And not by saying, okay, I want to borrow money, right? Borrowing money is a bit limited. But with stock markets, people from all over the world, people from Africa, from Europe, from America, they can invest, depending on where it is listed, by the way. They can now invest in our business. And by investing, we get their capital, we do business with their capital, and they enjoy the reward with us as well. All right, do we get the concept? Do we get the concept? All right, so that's the very basic. That's why companies do it. It's not out of the goodness of their heart. They need your money to grow their business, right? So that's why they give you equity. It's equity. That's why it is ownership. Equity, they give you a portion of their business when they offer you their shares to buy. All right, I'm sure we get it now. If you are asked to explain to a 5-year-old, please tell them you've attended this masterclass and you know exactly how this works, all right? So how you can make money from the stock market. So people say, people talk about stocks all the time, a financial expert like yourself, but how do I make money? Is it by fixing it? Is it that when I put my money, they will give me an exact return after a period of time? No, that's not how it works. I'm going to explain to you the 2 ways you can make money from the stock market. First is through what we call dividend. I want you to type dividend. Dividend in the comment section. Let me see you type dividend in the comment section. Dividend is the first way you can make. It's one of the ways you can make money from the stock market. And I'm going to explain to you in a minute what dividend is. All right. Again, at this point, I want to say, if you've not hit that subscribe button, hit that subscribe button and support this channel and what we are trying to build here, because I want this to be a place you can come to learn everything you need to build wealth, regardless of where you're starting from. If you're a top professional, you're looking, or you're a billionaire looking to become a billionaire, or you're a thousandaire looking to become a millionaire, wherever you're starting from, this is the channel you need to become more financially literate so that you can take your finances to the next level. So hit that subscribe button. And if you're still not shared with your friends, kindly do so and support the work we are doing here. You can share with your friends, share with your enemies as well, so that we can all make this money, all right? So dividend, back to dividend. So dividend is a portion of a company's profit that is given to their shareholders, that is given as a form of reward to their shareholders, all right? A portion of a company's profit. So I'm going to explain that. Say your business now, the lemonade business, after issuing stocks to your shareholders, you now see that your business is doing well for maybe the year. You made $1 million. As an example now, you made $1 million in profit. You want to share a portion of that $1 million to your shareholders. That means that money would go directly to the people that have invested in your business, which are your shareholders. So that 1 million naira, $1 million is now shared according to the number of shares that you are holding. So for example, if person A is holding 2 shares, maybe you're giving them $1 for each share that they own. If they are holding 2 shares, how much do you think they're going to get back in dividends? All right, let me go over that analogy again. You own a business, a lemonade business, right? That we used to raise capital when we talked about it here, right? And your business has done well. You made $1 million maybe during during one business year. You made $1 million. You now want to reward your shareholders, which are the people that have invested in your company. You now say, for every share that an investor holds, you want to pay them $1. All right, say you have 1 million shares as an example. You now say, I want to share it in a way that for each stock that you own of my company, of my lemonade business, I will give you $1 as an investor. If person A holds 2 shares, how much do you think they are going to get? All right, that means they're going to get $2. Am I right? They're going to get $2. If person A holds 2 shares, that means they're going to get $2. If person B holds 50 shares, how much do you think they're going to get from that business in form of dividends? If person B holds 50 shares, let me know in the chat box. All right, so this is the concept of dividends. This is the concept of shares. This is how it works. People, a business can say, okay, we want to share our profit with our shareholders. That's why I said it is a portion of a company's profits that is given to their shareholders as a form of reward. All right. So now here is one thing I want you to note. Not all companies pay dividends. Not all companies pay dividend. There are some companies that pay dividend. There are some companies that don't. All right. There are some companies that pay dividends. There are some companies that don't. There is no law mandating it under heaven that all companies must pay their shareholders dividends. There is no law, especially when it comes to stocks now, stock investing. There is no law that says that. It's just a company that will decide or determine if, with the structure of their business, they want to reward their shareholders by paying dividends. All right. I'm going to come to a place where I will explain that further. So for you as an investor, if getting passive income consistently is your priority, you probably gravitate towards a dividend paying portfolio, or building a dividend paying portfolio, or investing in dividend paying stocks, so that you can get the consistent payout that those companies offer to their shareholders. Do we get the concept now? All right. Now, let me explain capital gain. Capital gain is the growth in the share price over time. Let me explain. Say you invest in a company now, you buy a share of a company that you believe in. You buy a share for $20 per share. You buy it for $20 per share. And over the next, say, 8 to 12 months, that $20, the company has now grown its share price to now be, say, $40 per share. That means your $20 has now become $40 because the share price grew over time, because the share price grew over time. Am I right? So for you now, your capital gain, if you sell your share at $40, if you sell your share at $40, your capital gain would be $20. Let me explain again. So let's say you bought a share of a company or a stock of a company at $20 today. And 8 months or 6 months or 12 months down the line, that same share or that same stock is now selling for $30 per share. If you sell it at the point where it is going for $30 per share, you would have made $10 on your $20 investment. Do we get it? Let me know in the comment section if you get it. Let me know in the chat box if you get it. Let me know if you get it. Say, yes, I get it. Yes, I get it. Yes, I get it. That's how we know you get it. So this is the difference between capital gain and dividends. This is the difference between the two. And these are the two ways you can make money from the stock market. All right? These are the two ways you can make money from the stock market: dividends and capital gain. If you understand these two now, the way I've explained it, let me know in the chat box by saying, yes, I get it. 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 All right, let me know. So let's look at the concept of, this is another question I get asked often. If for every time I've been asked this question, if somebody paid me $1,000, I'll probably be so rich right now. This question is very common. And the question is, how do I know which stock or which company to invest in? Yes, I want to make money through dividends. Yes, I want to make money through capital gain. Yes, I want to own global companies. I want to be joint owners of global companies. Yes, I want my money to work for me. So how do I choose? All right. I'm going to show you the way you can choose using focusing on different things. All right. You can choose to invest in a stock based on sector or industry. All right. For example, you can say my interest. You can say your name. Say my interest right now is investing in the tech industry because the tech industry is growing really fast. As an example, that can be your interest. All right. You can now say which companies are doing well in the tech industry. So you are choosing the stock to invest in by using the industry focus. So you say, I want to invest in the tech industry, as an example now. Which companies are doing well in the tech? Is it, now you can say biotech, is it the health tech, or you can say other forms of tech like Apple that we mentioned, Meta, is it all these companies that are doing really well? Which one do you want from the tech industry? That could be your focus. You can say, okay, I want to invest in the oil and gas industry or in the oil and gas sector. Then you start focusing on companies that are doing well or thriving in the oil and gas sector. That's how it starts. That's how you know which companies you can start, you can focus on. All right, first you have to know where your area of interest lie. Or some people say, I don't care about the industry. That's fine. If you don't care about the industry, as we go through the list, this checklist that I've created, you'll be able to know which area to focus on and what is your own indicator that you can use to choose the stock to invest in. You can also say, I want to invest based on market cap. We've explained what market cap is, right? Market cap is basically based on the size of the company. Say if you say you want to invest based on market cap, that means you're telling me that you want to invest based on the size of the company, right? We saw how we calculated the size of Apple earlier, where it is now worth over $3.2 trillion, right? So your indicator can be, I want to invest in the mega companies, the ones that are really up there, like them Apple, like them Nvidia, like the ones that are worth trillions, the ones that are worth hundreds of billions. And then we have the ones that are between, that are worth, called small cap. Those are between 2 billion and 10 billion, I believe. So your focus can be on the market cap. How big is the company? Do you want a company that is well established such that you feel like that will contribute to your peace of mind? You don't want to invest in a penny stock, maybe a company that is less than $1 billion in valuation. That is probably going to be a penny stock. It's less than $1 billion in market cap. It's still a small company when you look at the global stock market. It's still a small company. So the size of the market cap can be an indicator for some investors, because we have the mega, when you are looking at the market cap of the company, you have the mega market cap, you have the large market cap, you have the medium market cap, and you have the small market cap. So that can be an indicator for you to say, okay, this is where I want to invest. But for me as an investor, I don't really focus so much on the market cap. The only thing I know personally is that I would never do small cap companies. It's not in my strategy. I don't do penny stocks. I don't do companies that have not proven themselves as much as I believe that it needs to be. So I focus on medium, large, and mega companies. All right. That's my own ideology. All right. Now, the purpose is where I think a lot of us should focus our energy on. You have to answer this question for this stock I'm about to buy. What purpose do I want it to serve? How do I want to make money from it? I always say on my community channel, on my community Money Talks with Ife everywhere, that for every stock you buy, for every share you add to your collection of stocks is what we call portfolio, or of ETFs or REITs. Collection of assets is what we call portfolio. So for every stock or every share you add to your portfolio, you have to ask yourself, what purpose would it serve? How am I going to make money from it? Am I investing in it for dividends, which is the income investing? So you're investing for income. Income being that maybe every quarter the company pays out dividends and you want that to keep accumulating. So your focus can be income primarily. While for you, you are looking for companies that can go from, that has the potential to go from, say, $20 to $50 in the next 2 years or in the next year and a half or whatever. That might be your focus. Maybe capital gain is your focus because you're investing for the future and you want to just keep accumulating. So your purpose will tell you where you fall into. Now, there are companies that we call dividend paying. Those are the ones that you would focus on if your primary aim is to get that consistent, predictable passive income. So if I have 10 companies in my portfolio and they are all paying dividends, I will know that I can predict the amount I would get every month from my portfolio. So if I'm getting $1 from that one, I'm getting $2 from this, I'm getting $3 from that. At the end of the year, I can calculate how much I've earned in form of passive income or dividends from my portfolio. Do we get it? All right. Do we get it? I know it sounds simple right now, but trust me, it doesn't get simpler than this. It doesn't get simpler than this. This is how people that earn thousands of dollars from their stock portfolio, this is how they do it. All right. That can be your focus. Or for you, it can be capital gain. I'm looking for companies that they have interesting performance in the past. We believe that, oh, they can still do really, really well in future. I just want to own a piece of that company and hold. Somebody said, I was looking at one of these videos recently, and it said that if you bought Amazon about 15 years ago, if you invested $100 in Amazon about 15 years ago, you probably, or is it 15 or 20 years ago? I can't really remember the figures right now, but the numbers are crazy. Say maybe you invested $100 or $1,000 about 15 years ago, you will have over $10,000 by now. All right. And you'll be like, that is crazy. That's how much your money can grow in form of capital gain. All right. Let me use NVIDIA as an example. NVIDIA is still a current company that a lot of people are still talking about, even though it has come down from some of its highs. NVIDIA went from being around $80-something about 2-3 years ago, right, to being valued to getting to $1,300 per share. That's how much you can make from capital gain. Does that happen to all stocks? No. Does it happen to every stock? No. Does it happen to every company? No. But NVIDIA was well positioned for the AI boom that was coming with the semiconductor industry, right? And that is conversation about industry again, right? Because the industry that NVIDIA is at the very important phase of AI technology, right? And that really helped it to grow its revenue, to grow its performance, which encouraged investors to put in more money, to give them more capital to do business with. And with that, their share price grew. Now, this is the point I would like to explain to you what affects the movement of the share price. So some people will say to me, Fair, I invested $20, but when I checked, my $20 is now $18. It's normal. The share price of a company fluctuates. It's not fixed. With stock investing, you're not fixing your money. Remember, I was explaining to you that market cap can change as well, right? The share price can fluctuate because it is controlled by demand and supply. It is controlled by demand and supply. If a lot of people are rushing to buy the stock of a company, as more people are buying, the more the share price will go up, right? If more people are selling, the share price will come down. So in the short term, there can be movement. There can be movement such that you're looking at your share price, you bought it at $20, now it is at $17. For me, I don't worry because I know if you've invested in a good company, in a company you believe in, then you have nothing to worry about. You have absolutely nothing to worry about because it's just about demand and supply of the moment, right? Now, I would also like to state at this point that if you have a get-rich-quick mentality, or you are looking for a get-rich-quick scheme, stock investing is not the best place for you to be. Honestly, it's not. Maybe you should go to something like cryptocurrency and the likes. But if you want to build sustainable wealth that can outlive you, wealth that you can retire on, stock investing is the right place for you to be. But if you are looking to make a quick buck, no, you will not be happy. And I'll be honest with you. Honesty is one of the things that I preach every time. I'll be honest with you. Don't start stock investing. Go and do trading, forex trading, where there is higher risk, higher chance of losing money, of going bankrupt. There are just a lot of things there, right? But there's also a higher chance for you of flipping your money in the short term. The higher the risk, the higher the reward, right? Again, if you've not watched that video, the video on my channel right now, I really advise you to watch it because it will help you understand that, what I just mentioned, all right? So this is how you have to start thinking as an investor. If your goal is for short-term, stock investing will work for you. But if you're ready to build brick by brick, let me see in the chat box, brick by brick. If you're ready to build brick by brick, a wealth that can help you retire early, that can help you live your best life, that can fund your lifestyle, the stock investing is where you need to be, period. Honestly, is where you need to be, okay? So your purpose now, back to purpose. So as an investor, you can now decide, do I want to only focus on dividend-paying stocks because my purpose is income, or the purpose of this portfolio is income, or do I want to focus on capital gain, a company that can grow in value over time? All right, now this is where I have to explain that it doesn't have to be one or the other. A company paying you dividend you can also benefit from it when the share price grows. Companies pay dividend. For example, Apple pays dividend, but the dividend is not just a lot, all right? A company can be paying you dividend and you still be enjoying capital gain. Do we understand? Because if it's a company that is still that has the opportunity to really grow, for example, NVIDIA pays dividend. So it doesn't have to be one or the other. You can look for companies that pay dividends and they still have the potential to really, really grow in the future. All right. Or you can just look for a company that pays dividend and know that it will still grow in capital gain as you go on in the future. But the only thing is that most companies that pay, say, between 5, 6, 7% dividend, thereabout, most of them, they don't really do crazy numbers in terms of capital gain. All right. For example, now Coca-Cola has been paying dividends. It's one of the dividend aristocrats. For the past 25 years, it's been paying dividends. Does it have do I see it in the future of Coca-Cola that its price will jump from where it is right now to maybe about $1,000 per share in the next year or 2 years? I don't see that. But if I want the dividend, consistent, reliable dividend that Coca-Cola offers, I'll probably just pick Coca-Cola as part of my portfolio. Do we get it? So your purpose is important. Be clear on your purpose. All right. And here is where I will now talk about risk. A company can come with, even on the stock market, there are conservative companies. All right. You can invest in dividend aristocrats. They are conservative. These companies are not, they don't have, their stock price don't fluctuate too much. All right. Unlike tech companies that it can drop by 6% one day, it can drop by 15% one day. The same way, it can do 20% increase one day, it can do 60% within few months. All right. So if your risk is, I want something conservative, all right, you have to look at those type of companies when you are picking your stocks. So again, I will refer you back to that video. You really have to watch it because it's very important so you understand this. And at this point, let me know if you're following. Let me see in the chat box with your emojis. We are getting it. We are getting it. We are getting it. I want to see that if you're getting what we are saying here. So what are the pros and the cons? The pro, of course, is you make money. You build sustainable wealth, right? You will see your net worth grow over time. All right? You will see your net worth grow over time. You will build sustainable wealth. Those are the pros. You can earn consistent passive income from your stocks through dividends. Your money can grow from $100 to $1,000 value in a few months or in a few years. It's possible. Those are the pros. What are the cons? The cons is you cannot focus on stocks for short-term gain. If you're looking for where you can put your money in 3 months and get fixed return of 5–10%, that's not where you need to be. All right? The stock market, another con is the stock market can come down from time to time. Like I said, it fluctuates. The stock price fluctuates. All right? But if you have a long-term mindset and you're not just investing for quick buck, you won't really be faced. All right? It fluctuates, and that is just normal. That's how it happens. It's not like when you save your money on an app, or you save your money or you invest in maybe money market fund or commercial paper, and they tell you, oh, verily, verily, we are going to give you 15% return on your money. The stock market doesn't work like that. As the investor, you take all the risk. All right. Again, I'll refer you back to that video. You need to watch it. All right. So that's one of the cons. Another con is, what is the other con for stock investing now? I really don't see a lot of cons for stock investing. I'm biased that way, honestly. A lot of people say, oh, I invested $500, now it's at $450. There is a rule I work with. First, I pick companies I believe in. I never invest just because everybody's talking about something. I pick companies I believe are doing well, right? Secondly, I invest for the long term. Thirdly, I don't focus on the short-term movement. Say, yeah, it has come down 10%. Now let's go and sell. No, I don't do that. And if you believe in the company you invested in the first place, you won't be worried when it's momentarily down. Honestly. So for me, what it helps me do is, if you don't sell on the stock market, if your stock that you invested in is down by say 5%, 10%, if you don't sell, that loss is not your own yet. It is until you sell that you've actually lost money. Do we understand it? Let me know if you understand it. So those are some of the cons that people talk about. And thank God for technology now. On your phone, you can monitor your stock portfolio. Some people say, oh, my parents invested in stocks. They cannot access it anymore. They can't find their broker. Technology has cured all that problem for us. But for now, with a reliable broker, you can track the performance of your stock portfolio on your phone. You can do your trades yourself. You can buy your stocks yourself. You don't need to pay any broker to do that for you directly, but you don't need to have like thousands of dollars or a lot of money to get started. You can start on your phone. You're in control. All right. Another advantage of stock investing is you can easily liquidate. Unlike real estate, where if you want to sell your property, it can take you months before you find a reliable buyer. With stocks, you can easily just on your phone, you can liquidate your portfolio and your money will come into your bank account. That's another fantastic thing. Within 5 minutes, less than 5 minutes, if you have a good broker, less than 5 minutes, you get your money. All right. So that's another advantage of investing in stocks. So I want us to look at this example. This is just a snapshot that I took recently of these companies, right? Look at, these are tech companies. We call them part of the big seven. We have Apple, Microsoft, Nvidia, Meta, Amazon, Google, and then we have Tesla. All right. All right, at some point about 2 years ago, or less than 2 years ago, this company was going for, Meta was as low as $160 at, what am I even saying? I think $80 at some point. It was that low when it was really beaten down. But look at what the share price is right now. This is capital gain. If I sell my Meta holding, Meta that I bought around $80, if I sell it at $517 now, look at how much money I've made. Do we get it? Do we get it? Let me know. Yes, we get it. Let me know. Yes, I get it in the chat box. All right. So I want to teach you about ETFs. This masterclass is packed. Remember in that email I sent to you, I said, get your snacks, get your water, be comfortable because we are here to learn. All right. You cannot want to build wealth and not be ready to learn. So we are here to learn. So I've taught you about stocks. That in itself is a masterclass on its own, which we've dissected. Don't worry, I'm still going to take you through a practical session of looking at where to find these stocks, how you can start buying them now, how to look out for them, the indicators, the things you need to check before you buy a stock. I'm still going to get there. So don't worry, stay with me, all right? So let's look at ETFs. What are ETFs? So ETFs, see it as a basket of stocks that tracks or seeks to outperform an underlying index or sector. I'm going to explain. It's just a lot of grammar there, right? But you can read it again so you understand. So a basket of stocks that tracks or seeks to outperform an underlying index or sector. What does that mean? So you know the way we talked about stocks being a piece of a company, right? You can now have, you can now have a fund, you can now have a fund specifically dedicated. You can now have a fund specifically dedicated to stocks in a particular sector. I'm going to explain that again. So you have a pool of funds managed by an asset manager. So you have an asset manager that manages a pool of funds. So this asset manager now takes this fund and invests in, for example, it could be the fund is dedicated to investing in a particular sector. So what does that mean? So it would invest in different companies. Different, could be 10, 20, 50, 100, 500 companies that are in that particular sector. All right. So what does this mean? It means when you invest in an ETF, you're not buying one stock. Do we get it? You're buying a basket of stocks. You're buying a basket that contains different stocks. So again, let me explain in another way. For example, now, let's say you want to invest in the electric vehicle industry. The electric vehicle industry is where Tesla is the leader. There are other companies that are producing electric vehicles as well. So you want to invest in the electric vehicle industry, but you just don't want to buy Tesla. Maybe because you think Tesla is fluctuating too much, or you just don't want your exposure or the risk of just investing in just one company, all right, of investing in just Tesla. You now say, let me go and buy an ETF dedicated to electric vehicles. What does that mean? It means you want to buy a basket, and in that basket is made up of different stocks of electric vehicle companies. So in that basket, you can have who are the electric vehicle guys that I know now? You can have Ford. All right, you can have Ford. You can have some of these other guys doing electric vehicles. You have their stock in there, as well as Tesla. So what that does for you is your fund is not, it doesn't fluctuate as much as, it won't fluctuate as much as Tesla does. Do we get it? I want to know if you get that explanation I'm giving you. So you have a basket. Instead of buying one fruit, you go to the market, you buy one fruit. So you buy just orange. So instead of buying an orange, you decide, I want to buy a basket of fruit. So in that basket of fruit, you now have orange, you have apple, you have watermelon, you have pineapple, whatever. You have like 10 different fruits. All right. So with that, you have variety. You can buy that one orange and it's spot, right? It can be spot in the middle, or it might not be enough, or something might be wrong with it, right? But instead of buying that just one orange and exposing your money and your health with just that, you can choose to buy a basket. You can choose to buy a basket of that, right? And now this basket, see that basket as the ETF. That basket is now managed by an asset manager. So the asset manager is the one that either sells or takes away maybe pineapple at some point, or adds more of it, or rebalances it, or say, okay, let's reduce the orange we have in this basket. Do we get it? So the asset manager basically manages the ETF, the basket now, the proverbial basket. All right, it manages it. So for you as an investor, you can choose that I want to buy ETFs. And from my explanation, you can possibly guess why people invest in ETF. It's because one, it reduces your risk, right? If you're somebody that you don't like too much risk, ETF can be a way for you to go. All right. So your ETF can also track an index. So I don't know if you've ever seen any posts anywhere when people talk about S&P 500. So the S&P 500 is an index that tracks the 500 largest company on the New York Stock Exchange, listed on the New York Stock Exchange. All right. What this ensures is when you buy the ETF, an S&P 500 ETF, in that ETF, in that basket, you have 500 companies that you're investing in. All right. So what that does for you is it distributes your risk. If you want to say, I want to buy each of these 500 companies and add to my portfolio individually, one is going to cost you a lot of money. Secondly, your portfolio might not perform as well. You might not know how to balance it, right? So at the point where you feel like you want to contain your risk, ETF is the way to go. All right, so we have the S&P 500. So you see people flex. I don't know if you've ever seen those videos on social media that I own the 500 largest companies on the stock market. This is what they mean. You buy one ETF, you are buying the S&P 500. You buy the S&P 500 ETF, you're buying 500 of the largest companies on the stock market. All right. For example, here, another example I put here is the semiconductor ETF. So you want to invest in the semiconductor industry. That's a typo here. You want to invest in the semiconductor industry, and then you, instead of exposing yourself by buying individual stocks, you can just buy an ETF. I know that ETF is dedicated to companies that are in the semiconductor industry. I know by now we already get it, right? Even if you were a 5-year-old right now, I'm sure they get it. Let me know if you get it. Let me know in the chat box. Let me know. Tell me if you get it. All right. At this point, if you have any questions, please write them down. All right. What are the benefits of ETF? Benefits of ETF. As you can probably guess, diversification. right? Like I said, instead of just buying one orange, you can buy a basket of fruits that has slices of different fruits that you can enjoy from. There's diversification, and then there's risk management. You reduce your risk when you invest in an ETF. Now, how do you make money through ETFs? The same way you make money from your stocks. There are ETFs that will pay you dividends, and there are ETFs you enjoy from by their growth. All right? Your ETF that tracks the semiconductor industry will grow as well. Now, why do people, the question I get asked when people come across ETF is that why do people now still invest? Now, why do people still now invest in stocks? Why do people still invest in stocks, right? The truth is, for example, now, let me give you a clear example. Say you buy a semiconductor ETF and you buy NVIDIA. NVIDIA went from $80 in about 24 months, 140, less than $100 or thereabout, in about 24 months to be getting to an all-time high, getting to the all-time high of $1,300. Do we see that crazy number? Do we see it, right? But for the semiconductor ETF, it only went up for about 30%. It only went up for about 30%. Do we get it? So fine, it reduces your risk, but it also reduces your potential reward. Again, if you've not watched that video, please go back and watch it. You will clearly understand what I'm talking about. The first video on this channel that I posted, I said it was the preparatory video for this class. If you've not watched it, please go. Because it reduced your risk, right? Right. But it also reduces your potential reward. Meanwhile, if you had invested in NVIDIA and some other semiconductors, for as an example, maybe AMD, Micron, all those other guys, invest in them, your profit margin would most likely be bigger by now. Because your NVIDIA would have jumped from like $80 or $90 thereabout to $1,300 per share. Do we understand it? That's the difference. That's why some people that have higher risk appetite would rather say, I would go for my individual stocks rather than ETF. While some people will still say, I would shuffle between, open myself to buying some individual stocks and still buy the ETF to back it. It depends on you. So this is the reason why people still buy individual stocks, because there is a higher possibility of making more money. There's a higher potential reward. And of course, it comes with a higher band of risk as well. Do we get it? There is give and take in the stock investing game. There is no, you can't cut corners. Do we get it? All right. So 2 ways you can make money from your dividends the same way capital gain and 2 ways you can make money from your ETFs the same way capital gain and dividends. All right. So these are examples of dividends. So we have companies that manage this. This is a company, Schwab is a company, Vanguard is a company, SPDR is an asset manager, Vanguard is an asset manager, Schwab is an asset manager. So you see these ones are dividend paying ETFs. All right. At the time that this screenshot was taken, look at the dividends that they pay per annum. This is per annum, right? This is per annum. Do we see? All right. So I'm just going to touch on REITs real quick. I know our time is fast spent. I still want to leave room for questions. I want to touch on REITs real quick. If you have, and then we can go to our practical. I'll just touch on it. So REITs, like I said, for REITs, I'm going to attach the link to the webinar where I taught extensively on REITs. So if you're interested in learning about REITs, honestly, you should pay attention to REITs as well if you want to earn through passive income. If passive income is very important to you, you should not joke with REITs. All right, REITs, known as real estate investment trust, they are on average the highest dividend paying dividend instruments on the stock market. All right, REITs tend to REITs tend to pay higher dividends on the stock market. And here is why. It's because by law, REITs have to pay out at least 90% of their profits in form of dividends to their shareholders. By law. So REIT was established so that everyday people like you and I that are investors can make money from the global real estate market. All right, most of the real estate you see locally, internationally are controlled by REITs. All right, they are controlled by REITs. And REITs is like a pool of funds now. You buy REITs, you put together your money. Imagine the same. Okay, so I explained it here. Individual, you buy shares of REITs, and that money that you give to buy the REITs, the companies managing the REITs will take that money, they will acquire real estate with that capital. Now, the REITs now own and manage the properties, and they generate rental income, as we see here. The properties generate rental income. They collect rent from, they can be landlords to them, Amazon, to them, FedEx, to Walgreens, to all the multinationals. They pay rent to these REITs, right? And this REIT is required by law to pass along 90% of its profit to shareholders. So you as an investor, you are awarded your dividend payment. So for REITs, I would say for anybody considering investing in REITs, just let your focus be the dividends. I only invest in REITs for the dividends, not for the capital gain. I'm not particularly interested for the capital gain. If I'm not willing to hold that REIT for a long term, because I know capital gain is not the focus for REITs, it's dividends, right? So that helps me to just know that this portion that I'm investing in REITs is so that I can get a particular amount in dividends consistently. All right, so that's it. That's it, guys. So that's the fundamental of REITs. And now we are going to go to, like I said, I'll be sharing more with us, the link to the REIT webinar with us. So if this has been value packed for you, if you've learned something, let me see it in the comment section. Let me see value packed, value packed. If this has been value packed, let me see you type value packed in the chat box. Let me see you type that. So I know you're getting this, all right? So I want to show you in 5 simple steps how you can start your journey today, how you can buy your first stock, how you can buy your first ETF, all right? The first thing you need to do is to find a broker. The first thing you need to do is not to think about, what shares do I buy? What ETFs do I buy? That's where mental paralysis starts from. That's where a lot of people struggle and feel like I don't know what to invest in. No, you know what to invest in. At the end of this masterclass, you would know what to invest in. You would be able to actively start taking steps right now. The first thing you need to do is to find a broker, nothing else. Actually, the first thing you need to do is to learn, which you've already done, all right? Which you're doing right now, by being here. So kudos to you, all right? So the second thing, let's say the second thing now you need to do is to find a broker, because you have the fundamental knowledge you need to navigate your journey on the stock market. For Nigerians, Invest Bamboo is the first go-to. There are others like Trove, I think Optimus as well. There are others like that. But for me, I use Bamboo. I've been with them for years. Optimus is also doing well, and Trove as well. So for Nigerians, go to Invest Bamboo. Download the app, fill out the form, do your KYC, get your account started, right? You can do that on Monday. I know we're having this class on a weekend. You can do that on Monday, or you can start now, actually. You can start now and finish your process and send your documents, and everything will be sorted. In no time, you get your account up and running. If you're in the United States, you can use Charles Schwab, you can use Vanguard, you can use Ameritrade, Fidelity. There are some other ones out there. So choose the broker that you are comfortable with. If you're in Europe, if you're in the UK, you can use Robinhood. I didn't put that here. If you're in the UK, you can use Robinhood. You can use Trading 212. You can use Fidelity as well. So if you're in the UK, you can use any of that. In Europe, you can use interactive broker, which is you can use the Giro. I'm not sure I'm pronouncing that right, but the Giro. You can use interactive broker. You can also use trading 212. You can use eToro, and then you can use Cap Trader. All right. So for me, my personal best, a lot of my clients use trading 212 in the UK. A lot of my clients in Europe use interactive broker. A lot of my clients in Nigeria use Invest Bamboo, and a lot of my clients in America use Fidelity or Robinhood. So you can use any of this. It depends on you. So choose a broker. Again, I'm not doing paid partnership with any of these platforms. I'm just sharing my experience using this platform with you. So this is not like, oh, they paid Ife to come. I'm not marketing for any of these platforms. I've not collected money from them. I'm just sharing my experience. Some people might have a different experience. I don't know. So you can do a little bit of research. You can shop around if you want, or you can just go ahead and take any of the ones that applies to you and just try them out. All right. So you do your broker, right? You find your broker. The second thing you want to do is to do your research. And by research, I don't mean to complicate it for you. It's very simple to do. You can do for ETF, you can go to your ETF.com. I'm going to share the link with us later where you can do your research. But really, it's not complicated with the research thing. Most times on the broker platform you're using, they have research opportunity there for you to do. For example, you go to your Bamboo or you go to any other app that you have, you will see the opportunity to do your research there, where you can just search ETF, or you can just search any company, type the name of any company. It will give you the detail or some information on that company that will help you make the decision, like if that is what you're looking for. They will even segment it for you, right? They will segment dividend paying stocks for you, so you will see them. So don't let the word research, because a lot of people get stuck and they say, it's the research, I don't know what to. There's no big deal to it. If you sign up with a broker, they'll most likely produce or give you some guide or segment the stocks into brackets for you, different brackets that you can choose from. So don't let that overwhelm you. The most important thing is to get started, all right? So the next step I want you to take is to fund your account. Even if it's with $10, if it's with $20, just fund it. One thing I've realized is once you overcome the mental hurdle of starting, your battle is half won. Once you overcome the mental hurdle of starting, because a lot of people get knowledge and they just sit on it. And I still don't know what you know. You know what to do. You cannot have attended this masterclass and you don't know what to do. Don't worry, I will show you the whole, some of the other information we need to pay attention to as well. But it doesn't get simpler than this. Whatever broker you've chosen, go ahead and fund your account. After doing your KYC, ensure everything is done and proper, you're verified, your account is good to go. So fund your account. Some people will say, oh, but they're asking for my ID number. They have to. If you're opening a bank account or they're asking for Nigerians now, I've heard people say, oh, they're asking for my BVN and all that. They are a registered financial institution, right? To the best of my knowledge for Nigerians, Bamboo is registered, right? Registered SEC licensed, right? And their partner in America is also SEC licensed. So these are financial institutions and they have to collect details. It's like you're opening a bank account. You cannot go and open a bank account and say all they need is your picture and your signature. They have to get some form of ID from you. So don't be scared about that. All right? Don't be scared about that, okay? See it like you're opening a bank account, but it's your investment account, not your bank account now. So all those information requests are normal. So don't get stuck on, they're asking me for this, they're asking me for that. Don't get stuck on that. That is very normal. I've done the process. Thousands of other people have done the process. You have nothing to worry about. To the best of my knowledge and my experience, speaking from my knowledge and my experience, all right? So fund your account. Overcome the mental hurdle, fund your account. Then the next step, you buy your stock, your ETF or your REITs, whichever one you want to buy. Then the next step for you to do is to keep stacking. Now, this is important. A lot of people start, they invest once and then they abandon their journey. No, never do that to yourself. You never ever want to do that to yourself. You have to make your investment a bill you pay every month. That's how you will grow. I call it brick by brick building. If you want to build a house, you have to, we have laid the foundation today. The knowledge is the foundation, which we've done today. The next thing for you to now do is start building brick by brick. Brick by brick now is with each investment or with each fund you put into your portfolio. That $20, that extra $50, that extra 10 pounds, that extra whatever amount, just push it into your stock portfolio and keep building, keep stacking, right? It might look like, oh, it's not a lot. Where I'm starting from, it's not a lot. I don't have tens of thousands to start with. I don't have thousands to start with. Start from where you are and be consistent. Make it a bill you pay consistently, all right? That is the way you grow, and that is the way you build wealth. Wealth building is the word itself is continuous. You are building something. It's a continuous action you must do to get the long-term reward, all right? To get the long-term reward. That's it. Okay, so this is the end. This is the end of my slides that I'm going to be sharing with you. Okay, for now, this is the end of my slides I'm going to be sharing with you. My slides are going to be available. I'm going to share the link with you for the slides below. I'm going to share the link with you for the slides in the comment section, so don't worry about that. What I'm now going to share with you is where we're going to do our practical session. If you have any question so far, this is the time for you to ask them. If you have any questions so far, this is the time for you to ask them. Okay, so if you are not viewing, right? If you are not viewing, sorry, excuse me. If you have not subscribed yet, ensure that you go and subscribe right now. Again, if you have not clicked on that subscribe button, or if you have not shared it with somebody, go and subscribe right now. Okay, so let me open up the, I just want to share, I'm going to share my screen with you shortly. Okay, so I'm just loading that up real quick. Hold on for me, please. So one of the websites we use for stock research is Yahoo Finance. And that's what I'm going to share with you, yahoofinance.com. As you can see it on the screen right now, is yahoofinance.com. Okay, so this is yahoofinance.com. They give a lot of news about the stock market, right? So you want to come here. You can see that here you can do your research by sector, all right? You can do your research by sector. You can even go for ETFs here. Say you want to invest in ETFs, you can come here and do your research. So this resource alone, plus what your broker offers you on your platform, whichever platform you're signed up on, is very good and detailed enough to help you start your journey. So you see, you can do, remember we said the sectors are, you can do by sector, right? You can do by the type or the purpose you want to invest into. So here you can even do markets, all right? You can look at the top gainers, people that have been top gainers. These are the top gaining stocks. You can look at the losers. You can look at by sector, all right? They have, excuse me, they have by sector here and not by industry. So let's look at sector now. Say you want to go to technology sector as an example. So we're just going to do a quick research practical that will help us on our way. So Yahoo Finance is a great resource for you. Yahoo Finance is a great resource to have. And that's why I'm sharing it with you right now. So I'm still trying to load that up while we wait for the website to come up. So we can look at it by sector. We can look at it by, say, ETFs as well. The major problem, or I won't say problem, the major downside of it is that you cannot rely on it for capital gain. You can rely on it for consistent passive income, which is dividends. Now that's why it was created, right? That's it. So I hope I've answered your question. Other than that, it functions basically like all the other assets like stocks and ETF. The capital gain can go up and down. But again, invest in REITs for passive income, for dividends, and have peace of mind if that is what you want, all right? But in terms of capital gain, you cannot rely so much on it, okay? I only hear about foreign ETFs. What about indigenous companies? Okay, so this class is for global stock investment, not for the local, say, Nigerian stocks or ETF. This is for global stock investing. So that's what we are focused on. That's why we're only talking about the global investment opportunities. So somebody said, how can we identify good REITs to invest in? Okay, so what you want to look out for when it comes to REITs is how long they've been paying dividends. And you can do that with a quick Google search. All right, have they been paying dividend consistently? Okay, say you find a REIT now. You can Google search the website of the REITs, of the company managing the REIT itself, and read about their, I'm going to show you now when we start practical, how you can read about where they've been paying if they've been paying their REIT and how much they've been paying. The most important metric for REIT is how consistently they've been paying their dividends, because they were only created to pay dividends. So if it's not paying dividends, it means it's not performing well. All right, do we get it? So once you can identify if it's has consistently been paying dividends since it got started, then you know that it is stable and it is doing what it's supposed to do. That's the major indicator. Somebody said, I can only, okay, I've answered that. What broker do other Africans use? I only saw for Nigerians, America, and Europe. So it depends on the part of Africa that you are. For me, you can, I believe Invest Bamboo is also in Ghana, right? Right now they're in Ghana, and I believe, so that is, but for other parts of Africa, not so much. They're in Ghana, and I also believe they're in South Africa now. Are they in South Africa? So just, if you're in any other parts of Africa, just do a quick Google search on foreign stockbrokers, and if you have local ones giving you access to foreign stock markets, or you can also do that as well. All right. Somebody said, I have learned a lot. This session was amazing. Thanks for the insight. You're welcome, Susan. I see you too. Is investing in bamboo, using bamboo, safe for long-term holding? All right. So right now they are focused on, they have partnered with an international brokerage firm. So I see bamboo as see it as your Jumia. So they are not the owners they are not the ones handling the stocks themselves. They've partnered with an international and licensed brokerage firm called Drive Wealth, all right, for Nigerians and Ghanaians and other Africans that have access to Invest Bamboo. And what Drive Wealth does is, it is a brokerage firm in America that's given access to financial institutions in other countries to connect with them. So in the real sense of it, your stocks are with Drive Wealth and not exactly with Invest Bamboo. Do we get it? So even if Bamboo should pack up tomorrow, or God forbid, I hope they keep thriving, you will still be able to track your investment with Drive Wealth. You can go to Drive Wealth at any time, go to their website as an investor and use your ID to see your profile with them, all right? So you can also do more research on that, okay? Let me see if we have any other question. Is investing in the Nigerian stock market safe against inflation, or should we focus on foreign stocks? Okay, so there are still a lot of opportunities in the Nigerian stock markets for Nigerians that are asking. People are still making a lot of money from it. So you can invest in both, right? But it depends on your objective. But for Africans, you know that when you invest in the global stock market, when you invest in the global stock market, right, you first, you're protecting your money in a relatively stronger currency, and you're playing on a global scale. So there are more opportunities there, right? And there are, imagine investing in Meta, for example. You can't compare the size of Meta or Google to the size of some of our largest companies in Africa, all right? It's completely different. So again, depends on you. Yes, so I hope I've answered your question, Ruth. Yes, you can invest in Nigeria if that is what you want. It's also, when you say safe, I don't know what you mean by that, but yes, against inflation, yes, the Nigerian stock market has performed well in recent times, and it keeps performing well. So what are the risks involved in investing in REITs? I believe I've answered this question, but if you did not hear me, I said the major factor con of the REITs is that you cannot rely on it for capital gain. Rather, you have to rely more on it for you have to rely more on it for dividends. Do we get that? So that's the only thing. Okay. So can you invest directly in an ETF rather than using an app? Okay, so Olaronke, thank you for that question. So that app you see is not just an app, it's a broker, right? So, and you would always need a broker to access the stock market, even if you have millions of dollars to invest. That's the truth of it. So you always need a broker. They serve as your link to the institutions that are trading those assets on a larger scale. So no, you cannot. Even for index funds, you still need Vanguard, you still need these guys. So the only thing why we look at it as just an app is just because it's on your phone. But behind that app, we have brokerage firms that are managing those transactions. So don't just see it as just an app, see it as a broker. All right. So you would always need your broker, actually. So can we think of Bamboo as a channel like Alibaba? Yeah, so I use that example because sellers come to sell their products. Alibaba does not own the products, right? So the same way Bamboo doesn't own the stocks, quote unquote, they have partnered with Drive Wealth, which gives them access to the global stock market. All right. Somebody said, what is the difference between capital gain and dividends? Oh my God. With the way we've explained this thing today, okay? But let me try and explain it again, because we've already done a lot of work on that. But before I answer that question, please, if you've not subscribed to my channel, kindly do so. It is one of the ways, if you found value in what I've done here today in impacting you with knowledge, it's one of the ways you can support me, and you can also share with your friends on your WhatsApp, on any group you belong to, anyone you know would benefit from this knowledge. You can testify that this is great knowledge, and you're getting it at, just by being here today. So support the work by subscribing and sharing with others. Thank you. Okay. Somebody said, the difference between capital gain and dividend. So capital gain, again, is, say you buy your shares at $20, that same example I used earlier, and over the time, say over a period of time, your share price grows to maybe $30. If you sell at $30, your capital gain is now $10 because you've gained $10 on what you've invested. Do we get it? But dividend is a portion of a company's profits that they choose to pay out to their dividend, that they choose to pay out to their shareholders. I beg your pardon. That they choose to pay out to their shareholders. Don't worry, there will be a replay link of this class where you can watch over again to learn some of the things that you've missed. Somebody said, are we going to be charged by these brokers? So this is a fantastic question. I love it. This is a fantastic question. So for the brokers, most of them will charge you, again, now let me explain. Most of them they won't charge you anything to get signed up on their platform, all right? If you are outside of Nigeria, most times you would enjoy the benefits of commission free. So they are not charging if you are buying or selling. For the likes of trading 212, interactive broker, these guys don't charge you on buying and selling, right? They don't charge you for that. But for Bamboo, for Nigerians, they charge. That's how they make their money. Remember, I said they are not the primary custodian of the stocks. They are connected to drivers. So the same way any other online, see it as online shopping mall, but you're shopping for stocks, right? So the same way the way they make their money is through the commission. So they charge 1.5% when you buy and 1.5% when you sell. All right. If you're investing more than $10,000, that drops to $10,000 upward, that drops to 1%. All right, that drops to 1% when you buy and when you sell. Okay, so it is 1.5% when you buy and when you sell. Other than that, they don't charge you anything else. And they also offer the service of converting your Naira to dollars for you as well to be able to access the markets. Okay, that is a fantastic question. What is the best time of the year to buy stocks, please? There is no best time, there's no bad time. All right. There's no best time, there's no bad time. But I'm going to be sharing with you now, once we start the practical session, which I'm about to start now, I'm going to be sharing with you some of the indicators you can look at to show you, so that you understand what to look out for, okay? So we are back to Yahoo Finance. Remember, we were talking about sectors. Say, for example, you want to invest in the technology sector. Okay, great. I'm happy to see. So this is the technology sector. You can see here some of the interesting things that you can look at. All right. So in the past year to date, meaning this time last year till now, the sector has done 14.59% in profit, while the S&P 500, the index that tracks the 500 largest companies on the New York Stock Exchange, has done 12.04%. So the tech sector has done more than the S&P 500. Look at in the exact 1 year return. Oh, sorry, year to date. I mean, yeah, the exact 1 year return is higher than that. So since the beginning of the year till now, this is the return, and then exactly 1 year to measuring 1 year. This is also, you can see the difference, all right? But when you look at in the past 3 years, the difference is, it slows down a bit, but it's still a lot, a difference of about 12%, right? That's still a lot. And if you look at 5 years, you will see how the tech sector has performed against the S&P 500. The S&P 500 is one of the strongest benchmark of the tech sector. So you can see some of the other indicators here, which are interesting. So you can see the performance of other industries, like some parts of the semiconductor industry has really performed well. Software infrastructure, whereby semiconductors, this is where we have NVIDIA, AMD, Micron, and the others. By software infrastructure, we have companies that produce software, make software available for companies, right? There are those there. They have also done 7.11%, but semiconductor is the winner. Is really carrying the weight here. Year to date, you can see 45.9% is the year for semiconductors, right? You can also see semiconductor equipment is doing well. Computer hardware is also doing well. Those are the regions of it. So you can now see the different stocks, the largest companies in this sector. All right. So you want to invest now. You cannot say you don't know what to invest in. You want to invest in tech. You are here alone. You see the different companies that are doing well in the tech sector. All right. You can see that. And you can now move on to ETFs as well. You see ETF for the tech sector. There are different ones. All right. You can now choose the ones. This one is based on information tech ETF. All right. This is also tech. This is the semiconductor ETF. All right. So you can see here that you have a lot of information already. There should not be the case of, I don't know what to buy anymore. You should know what to buy when it comes to something like this. And for individual stocks, you can click on them and see how they are doing. For example, let's click on, but before I pick on that, I just wanted to show you how you can see here under how you can pick stocks, right? You can use sector. Remember, we used our indicators. Look at the companies here under this sector alone. We have 811 companies. This is one sector, but there are 12 industries, right? We have semiconductor, we have the hardware. Look at them. These are the industries, right? We have the solar, we have the electronic components, different arms of the same different arms of the same industry, right? And the market cap of the entire tech industry right now on the stock, on the New York Stock Exchange is over 16.6 trillion. That is big, and you can get a bit of that slice. And we have seen that the tech sector has consistently outperformed the S&P 500 in the past 5 years, all right? So let's look at equities. Equities here are referred to as stocks. They're the same as stocks. They are called equities. You can also find ETF. So here you can also look at other sectors. Apologies for that. Here you can also look at other sectors, whatever, like I said, again, let's look at real estate sector now. On this, let's see if that will quickly open up. Let's look at the real estate sector. All right, we are rounding up real soon, all right? You see the real estate sector now. And this year-to-date performance is by market cap, which means by capital gain. They are not talking about the dividends now. This is measured by capital gain, all right? By market cap. Remember, again, if you didn't get that part, you can watch this video again. I'll be sending it to your email. So watch out for it. You can watch it again. Look at your REITs here. This is the real estate sector. All right, for people asking how can we do research on REITs, this is where you can come to. You can see that there are different REITs. There is a REIT, real estate investment trust, dedicated to industrial, which means it serves, their properties are used for industrial purposes. They are retail companies, so they provide properties to REITs that provide retail properties, say for Walgreens, for shopping malls, for shopping complexes. They are the ones that manage those properties, right? And we have for residential as well. So you would see that these ones for residential, it means they own houses that people live in. They manage and own houses that people live in. There's for healthcare facilities, there's for offices, there's for mortgage, there's for hotel and motels. Like these guys own the properties of the likes of Hilton and the likes. Like, they are landlords to the big companies we hear out there, and they pay rent to those companies, and you can benefit from that. You can benefit from that through dividends, because 90% of whatever they collect, it comes to you as the investor, all right? So we have development, people that are developing new properties, you know, skyscrapers, making it varies. There are so many industries, all right? So you can now come, these are all the industries in these sectors, right? In this sector, I beg your pardon. So you can now come here to do your research. So you can see public storage, you have Simone Property Group, you have Well Tower. So anybody that has been to this masterclass should never tell me they don't know what to buy. All right? Because you can choose any of these companies and look at realty income now. Let's look at realty income, right? Year to date, this is what it has done. And this is not the dividend too. They're talking about capital gain. Even though I said they don't really do much in capital gain, they still do something in capital gain. Look at this one, is up 30% now. Can you imagine that? This one is up 30% now. So they still do something when it comes to capital gain, but it's not just going to be your primary focus when you are dealing with REITs. So you can see that you can still make money through capital gain, and this is independent of your dividends. the portion of their profit they are going to pay out to you every either month. Some of them pay it out monthly, some of them pay it out once a year, some of them it is quarterly. All right. So that is with REITs. So nobody should attend this class and ever tell me that I don't know how to invest though. I don't know where. Just come to Yahoo Finance and use this resource the same way we have used it today. The same thing we are going to do for our ETFs. I'm just going to show you that real quick. And then we'll look at one stock and look at all how we can analyze it together. All right. Real quick. We are almost done. You have done well, right? We have about few minutes more till we round off, so just stick with me. I know it's been a long night of learning, but trust me, your future self will thank you for it. Okay. If you are proud of your teacher, of your instructor today, let me know. Let me also feel the love in the chat box. And the greatest way you can show me the love, is to support this YouTube channel. This is one of the most daring projects for me because it feels like I'm starting again from scratch, even though I have tens of thousands of followers on Instagram and we have thousands on LinkedIn as well. This feels like a new start. So support me, share the message, share the great work we are doing, and trust me, it's still value. People you share with will thank you for bringing such value to their attention. So we are waiting for this ETF screen now to open up. And while we do that, let me just look at one company we can use to do our analysis real quick. Hopefully that opens up as well. And then we'll call it a night. Okay, so what I did was just to type Apple here in this search box. You can do that with any other stock you're trying to research. It's quite easy. So I want to give you some of the things you can use to know, okay, should I buy this stock now or I should wait? All right, this is very important. So first thing you want to do is you want to look out for the previous, what we call 52-week average. So you want to see that how has this stock price in terms of capital gain now? How has it performed? You don't have control over the dividends. It's the company that will decide how much they want to pay in dividends. But what you can check out for is what we call dividend yield. Like I said, Apple pays dividend, but it's not a lot. You can see it's very small, almost negligible. A lot of tech stocks don't pay really interesting dividends because they know their investors make most of their money through capital gain. So look at this now. In the past 52 weeks, the lowest Apple has done is $164 per share, and the highest it has done is $237 per share. So this shows you that this company has moved up quite well. It did this bottom and then it came up this way. You can see the range of recent price, right? You can see the range of recent price. You can see the market cap. You can see here the dividends for my dividend paying people. You can see the dividend yield that you're expecting to be paid. You can see another important thing you want to look out for is the PE ratio now. So the PE ratio for tech stocks tend to be around this range. So they are usually higher. But if you're in somewhere like a retail company or other form of industries, this should be around 20 or lower. But for tech stocks, this is still okay. All right. So you want to look at interesting metrics like this. So you will see the performance compared to S&P 500 in the past year, in the past 5 years. Look at that. See, this is why people go for individual stocks instead of ETF because they want more money, but it also comes with more risk in the short term. But if you're investing for the long term, you have nothing to worry about. In the past 5 years, we've been holding Apple, you would have 340% profit. That is good. That is your money multiplied by 3.4%, 3.4, three times. Math is difficult. You shall get what I mean. You shall get what I mean. Okay, so you can compare Apple to some of the other companies out there. All right. So you can now come down here to look at financials. All right. For somebody that is detailed, this is for somebody that is detailed. You can look at financials, their profit margin. So if they made 1,000 Naira or $1,000, they're able to keep 260 Naira or $260 of it. This is 26.44%. That is good. It tells you that they are making money, right? They are making good money, in fact. So you see, return on equity, that means their stock has been performing well. Return on equity shows you that their investors are happy. Look at this. Return on equity is good. Their revenue, a company making over 385 billion per annum, not since they started, per annum, 385 billion USD. It's crazy. These companies make crazy money, and I don't understand how anybody would not want to invest in them. All right. So look at total cash. All right. They even have a cash reserve of 61.8 billion. All right. And now this is good because you always want to come here and see if they've been beating estimates. Estimate is about, what analysts have been thinking about them in the past. Have they been beating expectations? So they've been meeting expectation and surpassing expectation, which is good. All right. You also want to see, you see some recommendations here and things like that. So it's quite interesting. Just walk through this page in your free time and digest the boatload of information here and enjoy the process as an investor. You remember, you don't have to have like mental paralysis just because of this, all right? You just have to, you can just go to sector set, just go to the sector like we did, like we saw. You can pick the top performers and just pitch your tent with them. It doesn't get simpler than that. You can pitch your tent with the top performance and that's it. Or you can decide to do more research on your own and come to it individually, search their name out individually like this, and you can see things like their price movements. Right, in the past 5 years, you can see like the analysis told us they've performed over 325% in the last 5 years. That is amazing. All right, so this is where we call it a day. I've shared so much with you, and I'm sure you found great value with what we've done here today. Okay, so I'm going to share this link with us as well during when I'm sharing with you the replay link so that you can access it and learn as well. So if you've learned something, let me know in the chat box. Don't forget to hit that subscribe button and share with your friends and let me know all the good things you think about this program so far. All right, so this is where we call it a night. Thank you so much for your time, and I wish you well on your journey to investing.